Good morning, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Monday, October 19th. Okay, it's 7:20 as I'm starting the video this morning. Got a lot of green out there on the board, up about between 3/4 and 1%. NASDAQ's up a little over 1%, and IWM and SPY are hanging around that 0.75% mark. Gold is green. Oil is flatline. So a lot of green out there this morning. Remember now, as we go towards the open, that depending on where we open up, there's going to be that open gap below. So be on your toes for that flash gap fill lower. Don't let that catch you off guard or take advantage of it, however you want to look at it. But there is that tendency, especially on green opens, to go lower to fill that gap. So just have your levels marked clearly as we get to the bell, because it's going to move around a lot in the pre-market, either a little bit higher or a little bit lower, and then you'll have your levels as the bell opens. Okay, let's get into the shorter term trading charts. Last night on the Weekend Navigator, we went over the weekly and the daily chart. So let's drop down to the 2-hour this morning. We've got this uptrend channel, and I adjusted this a little bit from other charts you may have seen last week, creating this channel here. On Friday, we made several failed attempts to punch up towards 350, and then we dumped into the close, bringing it right back to this trend line support. So today, I think it basically boils down to stay north of 347, which is right here. They gap it up. If they come back, close that gap, stay above, and then go higher. If prices start falling below 347, I think you've got to turn your short-term horizon to the downside and look for a back test of this low last week at 344. That would be my first downside target on any kind of break. And then, of course, we've got the big monster trading range at 341.50 that we certainly don't want to see re-entered from above. Here's 30-minute chart. I've penciled in a triangle. This isn't the strongest trend line in the whole wide world, but I was able to get a couple touches here. So today, we've got an uptrend line coming in on the 30-minute chart that could contain, a price drop here, and also the downtrending overhead resistance line here at 350. So we may chop into the apex of this triangle before it resolves. So kind of be ready for that. But I think the real levels are north of 350, for a breakout, and then breaking down below 347, 346 on the downside to open up that test I just talked about here at 344 and potentially 341.50. Make note of this bearish PPO cross right here near the zero line. That's usually a bearish look. As soon as we open, if we open as boldly green as we are now, that's going to try to turn that up rather quickly. But it's all about what happens at 9:30 when the bigger players come on the field, whether they're motivated to fade that gap open and keep going lower, or to do buying. And that'll really decide, if we're going to, pop 350 or come back down below. Q2 hour, I redrew this as a channel as well. Had the reach up on Friday to get to 293, and that was rejected pretty soundly, and back down to the bottom of the channel. So bulls really want to see this 288 hold here, or else, if we drop below, we've got this little bit of this gap yet to fill, and then comes 285 and 283 down below as potential support levels. RSI is still bullish. PPO is still bullish above the zero line. You can tell it's heading down. What the bulls really want to see is just to curl back up and put in a high level bullish cross here, instead of coming all the way down towards the zero line, which would put price below the channel, which is never a great thing if you're bullish in this case. 30-minute chart. Here again, you see a downtrend line that I've penciled in here, catching this cluster of candles. We've got a touch here as well. Right off the bat will be a potential test of last week's low down here at 287, and potentially get a bounce back up. I mean, to really get this chart going, price has got to get north of 293. This is where the most recent high was. That 293 that was support up here is now resistance, and price could make it up to there and then get knocked back again, or it could break through. Obviously the bulls are looking for a breakthrough. Now, depending on where this opens and if they fill the gap, remember, if these levels, this 289.50 and then 291, if those get recaptured from below, those are places where you can do a little bit of buying. I wouldn't go, hog wild down here below this trend line, but I think starter positions long would be fine. Raise your stop as you go higher, and then when and if 293 gets taken out, I think you can make a buy there, move up all your stops to just below 293, and then you can look for a run at the prior high up here towards 297.50 or 298. As we said on the 2-hour chart, you start breaking 286, that's going to open up a lot of downside, because you can see there's pretty big void beneath 286, and I would expect that to come down to 282 very quickly. IWM, good performer last week, gapped lower, then came up to fill that gap back into this trading range between 164 and 162. If you get a breakout above 164, I think you can buy that, and then the upside target's going to be this 167.50, which is key resistance. And if it takes that out, as we talked about over the weekend, that's going to be a strong buy. Now, if price loses 162, you really can't see price go much lower than 160, or else, you're coming back here to this gap again, which still needs to be filled. So, bullish chart. Let's just watch and see how price handles 162 and 164. Momentum and RSI are bullish. Here's the 30-minute chart. I've penciled in a little downtrend line here off of that recent high, and that run here at 164 that was turned back, and then we had quite a cluster on Friday right here at this 163.75. So the lines are the same, 162 and then 160. If they pull it back here to 160, I think you can make an objective buy there, but then it's got to hold. You set your stop just below and see if they can hold the line right there. Otherwise, like we just talked about, you're back into the gap. Facebook. Kind of a weak day on Friday. Made a run up here to this 270. Got a lot of people excited in the morning, and then they faded it the rest of the day. Back down to this uptrend line. For me, nothing's really changed since Friday. It's anything north of 264, I think you can be long and hope for a push to take out 270 and then 273. But you get below 264, then it looks a lot more bearish to my eye. So look for the recapture of 270 and 273 on the bullish side. Be very cautious below 264 on the downside. Apple. Punky close on Friday, lost this 120, is currently below this trend line. I looked in the pre-market, it was back up above 120, so there's a real battle at 120. To my eye, bullish above and bearish below. It's just where the war is taking place. You can see, as it popped above, that was support. Coming up from below, it was resistance. It popped out, but then faded. So it's really got to capture and rehold 120 in my eye, or it's coming back to 118, and then most likely fill this gap, and then we're back into the the soup again, this prior trading range between 117 and 113.50. So Tesla, another bad close. Had broken above 450, then dropped below and lost this uptrend line. So really, to get the ship righted, I think price has to go back above 450 and hold it, recapture this trend line. Otherwise, below here, it makes the chart look more bearish with downside objectives to fill the gap here and move back down to 430, and that would then become a very important line. You don't want to see price lose 430, because then you're way back down to 410 and starting to lose contact with the upper end of the range. So bullish above 450, looking for bounces or downside below it. Microsoft spent all day trying to break out of this 221.50, and I had my finger on the trigger and thought a couple times, I kind of missed it, and then it sold off. Then it sold off pretty hard in the final hour. I like Microsoft in general. I think it's been doing maybe a little bit better than the other mega cap tech names. We were long before and closed it here. I would like to find another place to get long, but here's the deal. Time's running short. Their earnings are right around the bend. I'm not gonna hold through earnings, and we've got the election in 2 weeks, so maybe this thing just chops around directionless up until earnings. I thought we'd get a pre-earnings run. Maybe that's not in the cards, so we'll just have to see. But I think if price were to break above 221.50, I think that's a buy right there. Amazon. This was the lottery winner on Friday. Look, perfect touch of 3,400, which was a well-defined level from way back when. That's why it's important to carry your levels forward. Perfect touch and a rejection and a sell-off the rest of the day. That would have been a great Friday trade for anybody that took that. But now it's below the trend line, below its prior low. So we've got lower highs and lower lows. It's really got to do some work to get back above this 33.35. That's the level for me where, recapturing that would put it on the right side of the chart, and then you could make a buy at 33.35 on the way up and look for a move to 3,400 and then possibly 3,450. Check earnings. I think it's at the end of October, like the 29th or something. So we've only got about 10 days to go. So we'll have to decide if that's something we want to do on a real short-term trade. Google actually looks the best of the mega cap tech names. We talked last week. We had this flag formation. It never came back to fill that Monday gap, and now it has broken out above. And even on Friday's heavy afternoon selling, it didn't give up the ghost. It has held this 1567 real nice. And so I think you can be long against that level. And, should it take out 1590, I think it would be off to the races. So as long as it holds 1567, 1570, I think is a bull setup. And lastly, Netflix. 2 real bad days of selling. I mean, to be working up this line, get this big surge, almost get to 570, and then they turned around and sold it all day Thursday into the close. Friday, they popped it again, and then they faded it again, even harder. So right now, I have not checked the pre-market price level, but right here to me is in no man's land at 530. I think you got to either wait for price to come into 525 and hold before you get long to have that line to shoot against, or let price come up and recapture 535 and then get long. I never like to, take trades in the middle of ranges. It makes it, kind of difficult. And we'll also have the, if it's trading higher this morning, there's that potential gap fill lower. Now, let's talk about this for a second. Netflix has earnings tomorrow after the bell. What I'm wondering is, does somebody already know? You know what I mean? Selling it into earnings, Thursday and Friday. What are they going to do today? Are they going to, keep selling it because they already know? Or do we get, some buying into the print tomorrow afternoon? So keep an open mind for more selling, because if they break this 525, we still got this big gap down here to fill. So if you were to get short on a break of 525, you got basically a $20 target from 525 down to 505. That would be a nice trade. And then, the unthinkable, lose that level and you're down at 485. That's not a prediction. That's just a scenario. But if people do know, maybe they want to get out while the getting's good, if you know what I mean, and are anticipating a miss somehow on earnings. If they sell it today, that wouldn't be much of a vote of confidence heading into a big earnings number. So be aware of that one. That's going to be interesting and may set the tone for big cap tech that are going to be reporting right after that. We have seen that in the past where Netflix on either a big monster beat or a disappointment kind of throw the rug over everybody and kind of dampen the spirits. So let's watch Netflix closely, if only for sentiment, to see what people are doing. Okay, that's all I've got for you this morning. If you are new to the site this morning, look on the YouTube channel for Weekend Review. Put a lot of work into that last night, a long video with a lot of new ETFs that I'm going to start covering. That would be good viewing for you. For others, if you like the content, please hit the like button and certainly subscribe if you're new as well. Also, you can look over in the show notes for links to the blog site and a place to register for all my content. Then you'll get it, each and every morning and whenever I publish, delivered right to your email box, so you won't miss a thing going forward. So today, just a little recap. Gap up. Watch for the backfill lower. We identified all the key levels. If price recaptures key levels from below, that's typically a place where you can buy and set a tight stop. Other than that, we'll have to just wait and see if this pre-market pajama trader move is real once the big boys step on the field at 9:30. So don't get overly excited. A lot can change in the 2 hours between now and the open, and then certainly after the bell rings. So I hope you have a good morning of trading. I'll touch base later in the day to let you know what I see going on, and we'll take it from there. So this has been Chris Buss with Traders Profit Compass. Thanks for listening, and talk to you soon.